Good afternoon everybody, welcome back to cilinixfxcapital and welcome to this new video right here while I'm on vacation. We're going to do a new trading education video. I wanted to do a full video right here on fair value gaps, and I'm going to teach you a trick about fair value gaps or imbalances, whatever you want to call them, that I don't hear about a lot. It's relatively unknown, I suppose, and we'll talk about that. It's an amazing trick, right? Because it's very difficult to use, and we'll get to that in a moment. But it can get you in some amazing trades, and you can get early into some amazing moves as well. So what I wanted to start off with, and I have a little bit of a script to the left of me so we can actually go over everything. What I actually wanted to start off with is how to actually use fair value gaps, right? So fair value gaps, how I use them on TradingView, and I will delete the overlay for this. You have to go to indicators, and then you type in FVG, fair value gap, and you add the one from nephew Sam. That's the best one in my opinion. It's easy to use, it's clean, whatever. So if you put that on the chart, what you will see is this. All right, so you see these fair value gaps, which a fair value gap, simply said, is a very easy way to check for imbalances. And an imbalance is basically where at a certain point of time, there's always buyers and sellers in the market, right? That's how the price moves. And at a certain point of time, there are so many buyers or so many sellers, but in this video we will focus on buyers. It works the other way as well. With so many buyers that they completely overpower the sellers, and the price jumps up and it skips a couple of prices, right? And what you then create is a candle like this, right? Price jumps up and you create a fair value gap. Now, you don't need to necessarily know how to draw this fair value gap. The indicator does that for you, but that's an imbalance. That's a fair value gap. Now, how that's most often being used is as a retracement entry. All right, so what you can see, for example, recently is that we had a move right here where we left an imbalance, right? We left a fair value gap, and you can see the price dip down into that, into the bottom of that, and found support. Great entry. However, there's a different way you can use this as well. And this is going to be quite a concise video, which is great because I like to make my videos short and concise. But sometimes a fair value gap that's not being filled is a great sign of strength as well, right? Because you should realize that, okay, so it's an imbalance, right? So the market wants to be balanced, so it usually fills these imbalances like it did right here. But an imbalance can only happen if something happens, or if there's so much buying pressure that the price skips a couple of prices, right? And that's not correctly how to say it, but still. So that's the only time that can happen. So that's a sign of great momentum as well. So sometimes what you see, right? If you start a move right here, and you have a fair value gap right here created, for example, at the start, sometimes the fact that a fair value gap does not get filled is the best entry confirmation you can get. All right, and that's very difficult, like I said, because it's much easier to just buy the retest of the fair value gap. It's very different. Like if you go back here, right, you can see we started this move right here, the 21st of April, and we had a lot of momentum right here, and we left a fair value gap. It never gets filled. And that was the best buy. It was the best entry confirmation you could have gotten. And yes, of course, you're not going to get a perfect entry because you don't know that it's not going to get filled right after it's been created. But still, after a while, you can still see usually the only time that something like this happens, so that we get a lot of momentum, we create a fair value gap, and it does not get filled, right? So it remains open, like right here, but also like right here, you're actually fine buying into later because there's so much momentum that the imbalance doesn't even get balanced out, and usually you see instant continuation. Like right here, like you would have probably only seen it right here, right? But if you bought there, you still there was minimal drawdown, and you could have had an amazing move up to the next highs. If you go to another time, so right here, you probably realize that here, if you bought there, minimal drawdown, great upside. And that is one of the ways that you can use these fair value gaps that are being created, not for entry points, but as an indication that there is enough momentum to buy the top. And that sounds very strange, but that is essentially what you're doing. Because at that point of time, it looks like this, right? So you see this, you see a fair value gap, it doesn't seem to get filled, and you know that that is a sign of great momentum. So you buy the top at that point of time. And that actually worked well. Of course, it doesn't always work, but it works very often. I mean, if you take a look at Bitcoin right here, we can take a look at some other coins where I also saw this. I mean, you can take a look at look at Ethereum. Ethereum all the way down here, we left imbalances. We filled some of those, but the lower one just never got filled. Same thing right here. We started to gain momentum the 9th of July, never gets filled. You could buy the top, you would be fine. And there's tons of coins that are very strong where you can see this. Right, so some of the criteria and some of the things you can look at to actually become a little bit more certain is something like volume. If the volume, which you can see down here, is extremely high compared to the volume before, and we create one of these fair value gaps that doesn't get filled, the probability of moving higher from that is even higher. So one of the things where you can, for example, see this is an older example, is Kaito. So Kaito back in what was it? Tuesday, the 6th of May, got huge volume, right? This volume we hadn't seen since the launch in February. And we also, another thing you can watch is just key levels. And we also broke above a significant key level. And we left those fair value gaps. And you can see, never got filled, would have been an amazing buy, even if you bought the top, right? Because there was so much momentum and we had such a big breakout that it just continued rallying after leaving one of those major imbalances. So that's one of the ways that I think fair value gaps can very much be used. And it's very difficult to use them, but it's one of the best ways to actually buy into bull runs and still make profits with them. So hopefully that makes sense. If it didn't, you can always join our Telegram, our Discord for free. Ask me some more information, some more explanation in there. But for now, that's it. So hopefully that helped. It helped me a huge amount of my trading as well. Thank you for watching. Take care and bye.